Hello and welcome back to the TF Team podcast, News You Can Use. This is David. I'm your co-host, joined again, of course, with Pierre. This is Between Dollars and Dreams. We thank you for joining us, Pierre, and we're going to talk about the news this week. It seems like fluctuation and uncertainty. It's kind of the go-to recently. I know we've been sort of saying this the last few weeks. Right now, things are at a certain place. By the time this gets onto the internet, we're not quite sure where we're at. So it almost feels like we're playing catch-up.
Exactly. Honestly, we could have played last week's tape, right?
We could have.
right about now, except, things, certain actors have continued with the war. And as a result of that, the markets are going topsy-turvy. So it's still where we were kind of last week, where the stock market is kind of being volatile. We saw the TSX, which was up last week about 4% year to date. Now we see that it's only up about 1% kind of year to date. It's still up. The NASDAQ, the Dow, the S&P, they're all in negative territory at the moment. But it's still early, right? So things could change, and a lot of things are happening. So basically, if you have a plan, stick to the plan. Your portfolio may be down at the moment, but you will see a rebound, because we've seen this movie before, right? I've been around longer than you have, but I've seen so many times, so many crises that we've had from the 70s, 80s. Honestly, pretty much every 10 years there's a crisis that kind of takes over.
Well, yeah, absolutely. So again, speaking of last week, we made some predictions, and it seems like, Pierre, you were bang on. So we were talking about the Bank of Canada and the interest rates, and they did decide to hold. Again, probably going back to that uncertainty piece, just not knowing. Maybe a certain person, puts something on social media and the whole world changes.
Exactly.
So the idea right now is to have that plan, to stick with that plan. And just weather out the storm at this point, because there's a lot of volatility, but over the long run, again, we do typically see.
Exactly. And really, the Bank of Canada didn't have any choice, right, in a way whereby it was just a wait and see, because they don't know it's funny. You would think they would be in the know, but they're just in the dark as you and I as to what the next moves are going to be from an international basis about the war. So let's wait and see, and then at that time, when things change, then we'll look at either increasing or decreasing rates. Unfortunately, you might not like my next prediction, is that I think that if it continues to go the way it is, they may be forced to temporarily increase rate, because you're seeing it. Inflation hasn't kind of kicked in yet fully into the marketplace, but it's just a matter of time, because you're seeing that gas prices are going through the roof. Oil is at over $100 a barrel. So it will hit the grocery aisle if it hasn't already. And to kind of temper this on a short-term basis, I could anticipate that interest rates might be on the rise. So what does that mean to you and me? If you're thinking of buying a house, maybe do it now, rather than, and I'm looking at you when I say that, because I know you're looking at dipping into the market. Do it now while rates are still fairly low, and give a guarantee, like a 90-day or 6-month rate guarantee, so that even though interest rates do go up, you're kind of locked in at lower interest rate. But having said that, this is just temporarily. So hopefully we don't hit the R word, recession. And as a result of that, things could get worse.
Well, yeah, again, you heard it here first last week, that the Bank of Canada was going to hold, and Pierre, you talked obviously to Tiff, and we kept that steady. So thank you for that. So again, the future we don't know, but currently, just hold steady, have that plan, stick with that plan. So this brings up another, benchmark that we have here in Canada, the home sales. And it seems like home sales were down. So what does this sort of tell us as well?
That tells us it's a buyer's market right now. So again, Dave, Now's the time. I mean, I'm hitting you in the head with this. So if you're thinking of dipping your toes into the market, now's the time. It is a buyer's market. So prices are relatively down. So it's all about inventory right now. Sellers are probably not going to get the price that they're looking for. So maybe some sellers are gonna postpone in terms of listing. But now's the time. Interest rates are still at a good rate. Prices are coming down to something that's getting to be more affordable. So yeah, I could see prices falling. I think for the first time we saw GTA homes below that magic $1 million threshold. I think it's closer to 800,000 than $1 million. And I saw the other day you could pick up a Toronto condo for about $300,000. So.
Wow. I mean, it's a shoebox.
Yeah. I mean, my dog may not even want to live in there, but at least it's a place you could call your own.
Absolutely. So, I mean, it is just becoming spring. The weather's just turning nice. So we're also probably going to see, those longer days. And I know during our first home buyers podcast, Kevin brought up the whole idea that in the springtime, you're going to see, the listings are probably going to pick up a little bit. So maybe we'll see these numbers rebound as well. So again, if you are looking to get into that market, we do have an upcoming webinar. Unfortunately, we did have to change the date. We're just rescheduling this for early April at this time. Do please keep clicking the links below. We will keep you posted on the updated date for that. But we will post that as soon as possible. Well, thank you, Pierre. I do appreciate you joining us again here today. On Between Dollars and Dreams. This has been News You Can Use. Thank you for joining us. Take care.
Bye for now.